Hello, my name is Dr. Maya Byfield. My business is The Phenomenal STEMist. I'm so excited to be here in Orange County because it's where I live. I live in Apopka, Florida. And I decided to make this business because I saw a need for underrepresented students to be successful in STEM, which stands for science, technology, engineering, math. And the best way I can do that is just provide products for parents to prepare them, whether it's a book or online STEM camps or just video podcasting. My goal is to transform this community, especially those who are underrepresented. And the way to do that is to help parents understand their children's minds and basically develop them at different stages of their lives to be prepared for a successful STEM career. Thank you so much. That's why I'm here. Hey, 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 it's the phenomenal STEMist on with Before Closes.
Yes, ma'am. Yes, ma'am. Here at
Listen,
the service. Here at your service. Let's do it.
I was looking at the opening credits. I'm like, well, look at how my hair is growing.
Listen,
It was
man.
sticking up and then now it's flowing down.
You done came a long way, girl. You done came a long way, like some Jeffersons type stuff. Every time we come on this, I see you, and then I see the old you, and then you come up, and I'm like, man, this girl. You done came up, girl.
I'm coming up. I'm doing my best. Listen, we're on tonight. It's Monday, first Mondays, and then you know
Mm-hmm.
what first Mondays means? It means
Mm,
market watchers, market watchers.
mm-hmm.
So all of you who are watching, you're gonna find out what's going on in the real estate market. What's going on in the real estate market right now, Brandon?
Let's do it. So we've been seeing some good activity, and I'm not sure if I mentioned this last talk, but summer is by far the best time to be selling your home. If you're interested in selling in this market, summer is the time to do it. We sell more homes during the summertime than at any time of the year. So yeah, even I even put one of my own homes on the market. I'm selling one of our investment properties because I'd like to turn one door into two. So that's where we're at right
Ah,
now.
turn that door.
Come
It's
on
how
now.
many doors?
I do some real estate magic up in here. But anyhow, so naturally prices are up in Orlando. Not a whole lot. It only went up just a little less than 1%. We're at 399 before, and now we're just over 400. So we see the dip. It was dipping out between January and February. It's done this between March and April, and now in the May month, kind of it's not shooting up, but it's slowly at a slower pace. It's kind of gradually going
Mhm.
in the right direction. So again, it still favors buyers. If you're interested, if you can buy, for all that can buy,
Mhm.
now is the time to buy. My goodness. Tampa is also on the recovery. They've jumped up much more than Orlando. Average home price is at 400 for Orlando. Tampa right now is right around 430.
Tampa is more than Orlando.
Right now, yeah, right now, in
Wow, right
terms of,
now.
sold prices, but not in terms of sales volume. Orlando is still outpacing Tampa in
Got you.
terms of sales volume, and that's for
Got
May
you.
numbers, 2024. So, they have a new program coming out, guys, that I'm really excited about. They had this last year. I'm actually gonna pull it up because my mortgage broker said, "You better shout this out on that podcast." I'm like, "All right."
Okay, okay.
I'm like, "Don't yell at
What's the
me."
new deal? What's the new?
All right, check it out. So the name of this is I'm pulling it up now. And just to give you a little bit of background about it, it's basically a home um, a down payment assistance program that's backed by the government. And on its face, it sounds like something that would be just for nurses and hometown heroes. Here it is. Here it is. Yes, come to Papa. Right. So on the face of it, it sounds like it's something that would be really just for first responders. Your
Yeah.
nurses, your police officers, firemen types, etc. But really, it's for everyone who is looking to buy a home for the first time, for first time home buyers. And a first time home buyer is categorized as someone who hasn't owned a home in 3 years. That's a first time home buyer.
I am a first time home buyer.
But you actually have an actual property, and on top of that, you in there in
Oh.
the FHA side, so you wouldn't qualify, Mom. I'm sorry. You
Oh,
have
oh,
to
okay.
not
So
have
you have to you
owned a
you have
home in the last
so
3
if
years
you owned and then lost and then
or
3 years
sold.
and then three or sold,
Mhm,
lost or sold, you
mhm.
own or lost and then sold, then you're a first time home buyer. Got you.
That's right. That's right. And to make it more specific, owned in your name. So, we won't get into that part, but in any case, again, that's that real estate magic. We ain't gonna talk about that on this one though.
What? What's the? I want to know what that means. But
So
shout out to people who recently sold a home. So if you wait
indeed,
3 years, if you wait 3 years, you could get first time home buyer benefits.
that's right. That's right. Your
That's good to know.
FHA in there, and if you're a veteran, VA is good to you, is eligible for that as well. So it basically says here allows home buyers to receive up to 5% of the loan, or capped out at $35,000 in a down payment or closing cost assistance. Now this is a zero interest rate interest pay down,
Wow.
non-amortizing, 30-year repay second mortgage. So basically, if it doesn't amortize, it stays as a second mortgage on your overall title, but you don't have to pay it back until you either refinance or you sell the property. So it just stays there. It's kind of like a lien on your home, but you're not making payments toward it.
Got
So
you.
that's the beautiful part about it. You
So
can
it's
get
a
that.
loan.
It's a loan.
It's a down payment assistance program, but it's really
Right.
a loan. You got to pay
Mhm.
it back, but it's a 0% loan, and you don't have to
0%
pay it,
interest.
and there's no
You don't have
rush
to
to
make
pay it back.
payments. There's no
Yeah,
payments.
there's no
There's
payments.
no
There's no pay
payments until you're ready to refi the property or
or
sell the
sell.
property. Yeah.
Got you. Got you. Or will the property? What if you don't sell or what if you don't sell or refi? What if you die and you give it to your offspring? I wonder, do the offspring have to pay it back?
Whew. So in that kind of situation, it depends on what kind of loan you have.
Hmm.
But I believe for VA, well, we all know what happens from reverse mortgages. It goes back to the bank. But
Yeah.
for FHA, all your regular loans, I believe that's what. Don't quote me on this. I'd have to look into it.
Yeah, yeah, yeah.
But
It's okay. You don't know.
if you die and your say your mom or a close
Yeah.
relative owns a mortgage, they'll take your money. You can continue making the mortgage. So it's not like they won't take your money. And over time, if you can show that you have a death certificate and everything else, you can actually get your name onto the mortgage in your mother's or
Yeah, yeah.
relative's absence.
I know how to get the house in terms of like the quick deed or stuff like that. I'm
Mhm.
just talking about that loan.
That loan, that
That
second
loan.
mortgage.
Yeah. See, so usually when you get that loan and then you sell the house, you have to pay the loan back. Not
Hmm.
the down payment assistance thing.
Hmm.
I mean,
I
it's
think.
okay. Like we don't. I don't want to say something we
Yeah,
don't
yeah, yeah,
know.
yeah, yeah. Exactly, exactly. Now, what I
Yeah.
will do is look into it for next month because it's not
Yeah.
viable until the 1st of July anyway. So
Cool.
on our next talk, I'll be showcasing that. In fact, that's going to be the name of the next show.
All
I,
right.
I'm gonna put
Down
it out there.
payment assistance. Down
Yes, ma'am.
different ways you can get down payment assistance.
Oh, I like that. I like that.
That's critical.
That'll trend. I like that.
Yeah. Yeah.
Let's
Yeah.
go
That'll
with that.
trend.
Yeah, 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 yeah. All right.
All right.
So let's talk about it, man. Let's talk about it. Let's talk about it.
These
Um,
these hedge funds taking all of well taking all the prop. Is that a myth? Tell me about the myths of it's been in the news of late that we call it institutional investors
Mhm.
um
Mhm.
buying all the property. What are the myths, and can you bust these myths?
I could bust them. I got my sledgehammer right here. Mm. We're gonna bust up some myths, but let's start with the actual definition of an institutional investor, and that is a large corporation that invests money on behalf of others, such as clients or members. So they're a lot like regular banks, right? Except that they're able to make higher risk investments on behalf of their members or clients
Shareholders,
or shareholders, right?
clients. Hmm.
And that's how they're able to go out there and just buy large swaths of property. So
Yeah.
let's talk about the myths before I give you some of the facts. Number one, y'all may have heard on whatever social media news you might have you tend to frequent, whether it's Facebook or even Reddit. Lord help you if you're on Reddit, Twitter, and the like.
I
That
don't
these
even know
hedge
what Reddit
funds,
is. I don't even know what
oh,
Reddit is. What is that? I don't even...
it's like Twitter except angrier. That's the best way
Oh,
to
really?
that's the best way to describe it.
Wow.
Um,
Is it Serena Williams' husband, the owner of that, or something like that? Or maybe it's the wrong person. I don't know.
you know what? I don't know the owner, but I heard something like that. I heard something like that. Anyway, again,
Yeah, yeah.
something I'll look into for the next one. Yeah, 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 yeah. I'll have all them facts for you on the next one.
uh,
Um, so first myth: people believe that hedge funds own 44 to 50% of the housing market or housing inventory in the United States,
that's a
and I'm
lot.
happy to say that that is a total fabrication.
Okay.
They do not own that many properties in the United States. Imagine if they own
Imagine.
50% of the housing inventory in the United States. What? No. How would you justify that from the lawmakers and from our overall government? Like how would we'd be asking how did you let this happen? But in any case, actually on a nationwide basis, they only own between 2 and 3% of the overall inventory in
Wow, we
the
go
United
from 40,
States.
50, 40, 50 to 2 to 3. That's a
Yeah.
huge myth.
Huge myth, huge myth buster. So y'all could take your heart pills. You know what I'm saying? You can relax. Our country is not owned by hedge funds, at least not on the housing side of it. Anyway, we ain't gonna talk about anything else. But that's what they own: 2 to 3%.
2
Myth
to
buster.
3%.
Yeah.
2 to 3%. Okay.
Second hedge buster or myth buster. Hedge funds, are they driving up home prices? Are they driving up home prices?
Seems like it
That
would, since, they just buying it all.
Yeah, no, it makes total sense. I mean, shrinking inventory and all that stuff. And that's why the answer to that is partially. I got to do
Okay.
a little partially, just a little
Mm,
bit. Right? So their goal isn't to drive up the market. In fact, the opposite. They want to keep prices low so that they
yeah,
can
they
keep
trying to
buying.
sell. Yeah,
Yeah,
they could get more of a profit
that's
if they
right.
keep it
That's
low.
right.
Yeah.
That's right. But inadvertently, if you're buying that many homes in a particular region, then you're going to affect the region. So
Yeah.
nationally, they only own 1 to 3%. But so in certain areas regionally where they are
Mm,
active in states like Arizona, Texas, Florida, North Carolina,
I was
um,
hoping you wouldn't say Florida.
girl, they up in here, man. They up
Oh,
in
boy.
here. You know, they know that this is where people want to live. They can own as much as 25% of certain neighborhoods, and I think as high as the highest is 30%.
Wow.
30% of the inventory. And guess what city that's in? Just take a wild guess. It's in Florida. It's in Florida.
Orlando?
It's not Orlando. It's not Old
Thank
Town.
God. Miami?
Miami.
Yeah, makes sense.
They own
Makes sense.
30% of the housing inventory in Miami.
Makes
Yeah.
sense. And look how explosive Miami is. So that's why you're like it's partially true.
Yeah.
Not because there isn't that's their intent, but I mean it's not like it's not the same, but it's like, back in the days a whole bunch of New Yorkers came down and started buying up the property, and then
Hmm.
the prices ballooned
I
because
like to say,
it's comp
go,
it's
go ahead. Go ahead, D. Go ahead, Doc.
no, it's like, okay, so I'm coming in. Okay, so every month it's cost 2,000 more because people want to buy it, and people get desperate.
Hmm. Hmm. And
Yeah.
not only that, but it can add to just inflation of numbers, so to speak. So
Mhm.
if you have a couple of hedge funds that are going in there that are buying one out of every three homes in the overall area, in the overall city, then it's going to look like the city is hot.
Hot.
You know, like
Exactly.
there's
Exactly.
high in activity when actually it's these institutional investors that are going in there and buying, a third of all the inventory.
Yeah.
Yeah. So
So
I would say partially correct. And in
partially
some
correct.
areas in Orlando, I believe they own about 22% overall. That's still a pretty high number, right? That's just
That's
below,
high.
yeah, that's just below one in every four homes. So, but the thing is, in the last 4 months, we've actually seen a price decrease.
Mm.
How do you explain that? You know? So that's why I had to put partially in there because in every city we don't see the same we don't see the trends trending in that direction. That because they have such a large market share, prices have gone up. I think that outside factors have played a larger role in keeping the prices down like high interest rates
Yeah, okay.
because overall they can't buy everything. Most homes are still purchased by, believe it or not, investors that buy 10 or less homes and homeowners. People want to buy a home to live in the actual property.
To live there. Okay.
Yeah. They're the ones that are driving the market still. So, yeah,
Sounds good. All right. So
partially.
number one, it's not that many of them. It's only 2 to
Hmm.
3%.
Hmm.
And number two, they're not necessarily driving up the cost. At least not globally.
Right. Not in every market.
Maybe in certain markets, but not globally. Okay.
Yeah,
All
yeah,
right.
yeah, yeah.
Okay.
Next, are hedge funds owning whole neighborhoods?
Mm.
Scary stuff. Do they own whole neighborhoods? The answer is yes. In some places, they actually own whole neighborhoods. Um, there's a place in North Carolina. Actually, it's a city, a neighborhood within a city. I saw a news report about that, where they actually do own most of the entire neighborhood. And with the exception in 2003, they did the consensus and they own most of the neighborhood except for one house that was bought by another investor, a 10 homes or less investor that bought it cash. So
Okay.
you could say that the whole neighborhood's investor bought. And, you know, nobody knows this. They see people living there. They don't assume that everybody there is a renter, but that's what's going on. Now, here's the most startling number for me on this topic.
Wow.
In Tampa, across three counties, the top five hedge funds own 27,000 homes across three
Jeez.
counties.
Jeez.
Yeah,
27
27,000.
thousand or 100?
Nope, you heard it right. 27, three zeros, my three zeros, thousand.
27,000 homes.
Yeah.
Mommy, hold on one second. Stick a pin, Brandon. What
Mm.
should you have done? My mom says, I should have done that. What are you talking about? Should have
She
done that.
probably
I don't
talking
know.
about she probably talking about buying homes. That's probably what she's talking
Should
about.
buying multiple homes. She's
Yes,
not trying to buy
ma'am.
multiple
Pat
homes.
Byfield LLC. I'll rock with you, mama. We're gonna buy back the block.
Buy the black. Okay, go ahead. I'm sorry.
Oh, you good.
So 27,000 homes. We're talking about hedge funds, institutional investors, and mythbusters.
Hmm.
And one of the myths is that they own whole neighborhoods. And I'm hearing that's true.
Yes, some like I said, like that
Some as much
same
as
neighborhood, North
27.
Carolina, and as much as 27,000 homes across three counties in the Tampa Bay area. So that's Pinellas County,
Uh-huh.
that's Hillsborough County, and
Wow.
that's Pasco County. That they own
Wow.
27,000 homes across the three counties. Now, I don't know if they're all like all one in one neighborhood and then in another neighborhood, but if you own 27,000 homes in any given county, you're going to own some large pieces of a neighborhood going across the three counties. I mean, that's
Mm-hmm.
just what's going to happen. It's going to happen. So, like for instance, I'll give you the top four here: Invitation Homes, which is I'm familiar with Invitation Homes. They're one of the companies that rent a lot of property in and around
Mm,
Orlando, Tampa, etc. They own nearly 6,000 homes by
wow.
themselves.
That's a
I mean,
company, Invitation Homes.
Invitation Homes. Another company called Progress Residential. Some of you guys might know these properties. They own close to 5,000 homes. So
Wow.
just between two of them, that's 11 homes, 7,000 homes. Just between the
Yeah.
top two,
Yeah.
11,000 homes.
11,000 homes by the top two companies.
Yeah,
And they're just renting it out to people.
they're just renting it out.
And I mean, we can talk about the facts and the issues that come up with that, but I just can't imagine. Can you imagine not having access to homes and have to rent for a life? Like I I have a home and I pay less for my like 2,300 square foot home than a friend of mine with a one bedroom,
It's crazy.
right? Like I can't, like, my mortgage is cheap and it went down. Shout out to shout out to shopping. Shout out to shopping for insurance. My
Yes,
my
ma'am.
my insurance went down $400.
Oh, hallelujah. Can you put on here? Can you put on here what insurance company you rocking with? I'd
I,
like
I
to
I
know.
rocked with a I got a broker
Okay.
to search for me, and he's what's his name, Peter, I can't remember his name, but maybe next month I'll come with ways to save. But yeah,
With
Peter something.
professionals.
I'll email you the his email. But I shopped around this time, and people, you guys need to shop around. But that's not the point
Mm.
of the whole talk today. It's like literally rent. They're renting to people, and rent usually increases. Does rent decrease? Have you ever seen a situation where rent went from $2,000 down to, oh, we're going to give you a $200 discount on your rent?
Believe it or not, I just did that recently. I have
Really?
yeah, yeah, yeah. It's so funny you mentioned that. And you said the exact number. It's pretty crazy. The commercial industry on the lease side is taking a
Oh,
hit.
that's taking a hit.
Yeah.
That's true.
Yeah, and we just reduced the rent on a warehouse, a miniature warehouse. It's like a loft. You can turn into an office. We had it on the market for $1,000, so we had to reduce it and offer like a kind of like an incentivized leasing,
Mhm. Mhm.
where it's like he cut it all the way down to $700 for the first six
Wow.
months, and then
Yeah.
$800 for the last 6 months. So yeah,
Wow.
uh, uh, uh,
Yeah. So there are some situations where you do it, and it's usually when things are crashing. So all
yeah,
right.
yeah. Mhm.
Okay. So myth number one. Let me see if I remember. Don't remind me.
Okay.
Myth number one is only two. They think it's 40 to 50%. No, it's not that much. It's only 2 to 3%.
Uh huh. Uh huh.
Myth number two. You think that they're um. Oh shoot.
Come on
No,
now.
no, no. Okay.
Come on
I
now.
don't know.
The
I don't
M
know if this
stands
is
for
myth
memory.
number three.
The M is for memory. Come on now.
you I'm trying. What I'm feeling is you think it's that they are, oh, prices are going down. You think the prices are going
Oh, going
down.
up, 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 up.
Up, yeah, but not necessarily. They're not causing the prices to go up. And then
Mhm,
this one currently is, you think that they are buying the block. Well, sometimes they are.
mhm,
There are some whole blocks, and there's some places in parts of the state where 27,000 homes are owned, and there's two small areas in Orlando. I think you said that 11,000 homes are
mhm,
owned by two companies. So it's partially true. So there's some these myths. Couple of these two myths are partially true. It
mhm,
depends.
mhm,
Okay.
mhm, mhm. Yep, and
Okay. My mom said my
that's total inventory for those 2 homes. That could be all across Florida. I don't know if they're just in Orlando or in Tampa or in
okay,
both of
because
them. I'm
yeah,
thinking that's across the state. 5,000, 11,000 on one, and then you have a lot of
all
smaller
across the
ones.
state. Okay.
Yeah, 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 yeah.
My mom said she should have bought a property back in the '90s when it was cheap.
I
Yeah,
see that.
it was cheap in Florida. It was cheap in
Mm,
Florida. Like, yeah. But yeah, yeah, it was cheap and
There,
far
you
back
had we
back in the
had two
90s
chances. We had two chances. We could have bought in the '90s, and
and
if you
08.
missed that boat, and oh wait, as a
Mhm.
matter of fact, that is how um, this whole idea of buying single family homes came about. It started in 2008 after the
Mhm.
crash. A lot of these institutionalized investors, they were just people who owned loan packages. So
Mhm.
they were on the secondary market. They would buy these loan packages full of subprime loans, and when the loans went belly up, they
Yeah.
would, do what they do best, right? They'd buy
Mhm.
back the home. They
Mhm.
would sell the home at these, I don't even know how
Ridiculous.
low, ridiculously low prices, and then they would sell it amongst themselves. So, in those investors that had loans, they would be foreclosing on it, and some hedge funds would buy their homes, and they go out and buy another hedge fund's home. So they would just be buying amongst themselves, and you know they started off there, and the idea was that they bought up pretty much the market. So the hope
Yeah.
was that at some point when the prices went back up again, they would sell all the inventory, and that
Yeah.
never happened. They just
Never
kept
happened.
all the homes.
They just
Yeah,
kept them.
yeah.
They just kept them. Mom says they got me good in 2005. Ma,
Mm,
you got them good in 2004. I mean, you
mm.
bought a house in 86 in New York and sold in 2004. Okay, so
Okay,
it's the same thing. Like,
okay.
and you're back. We're back. We're back. So they
Mhm,
got you good, but
mhm.
we're back. Sandra says, "Is it cheaper to build your own home?"
That's a very interesting question, Sandra. So the answer is this: generally, yes, it is cheaper to build your own home, right? Because builder prices for building a home, you're basically paying whatever the builder will pay you will charge for building the property, parts and labor, just like a contractor, and then
Hmm.
the cost for the land, and that's pretty much it, right? But when you go sometimes to um, some of these builders that are that are just putting together an entire complex, they're selling completely out of the neighborhood of whatever it is that they're building, they're going to actually charge you market pricing. But if you buy your own lot, you hire a builder, and you ask them to build you a home that looks like XYZ, the cost for that is cheaper than going into an actual neighborhood where they're
Got you.
building homes
Got
and
you.
buying whatever it is that they have that they show you from
And
these
that's what
sales.
most people do, Brandon. That's what most people do. So it may not necessarily be cheaper. People
Yeah,
don't usually buy a lot and then find a contractor to build a home for them. They
yeah.
usually go into these areas and then they go into the model home and then
Hmm.
they buy and that's not and is that cheaper?
No, that's not cheaper.
That's not cheap. Got
That's
you.
not the cheapest way is just as I described it. Get your own
Yeah,
lot,
get your
hire
own lot.
you can even hire one of those builders. You could say, I'd like you to build this particular home on this lot somewhere out here. Do you do that? Yes, they'll charge you whatever they charge you to do it, parts and labor, and they will deliver the home on your lot. In those
Yeah.
areas, they're trying to get retail for those properties. But one thing that is different that you'll find at a developer that's building out a neighborhood, I see Sandra. She's posing a whole lot of questions. I'm gonna get to the. Let me get to that last one, Sandra.
Mhm.
The difference is that you'll find that builders that are building out a whole neighborhood and selling it out of a sales office is that they can offer you incentives that you can't get from a normal owner to owner, right?
Mhm,
So they'll
mhm,
they'll
mhm.
they'll throw all kinds of stuff at you. Will pay your closing costs. Will pay part of your down payment, right? No payments for the first 6 months or whatever. We'll pay your realtor 6%, 8%, whatever you want. Just buy the house. Just get the house. And so they're at liberty to offer those kind of incentives in that regard. So that's what makes them a little more competitive in my eyes.
Got you, got you, got you.
Yeah.
All
Hmm.
right. So, any more myths?
The last one, but let me answer Sandra's quick questions. They're not hard questions to answer.
So the first
Um,
question really was a question. It was just saying most homes don't provide a lot of land. That's true. There's like
mhm.
just these small, cookie cutter houses. But would is there should you buy land? Like, is that what you're saying? Buy a lot? Is this like buy land and then have people build on it?
I mean, you could do that. There are people that do that sort of thing. They buy a lot and they have a builder build on it. You know,
Mm.
again, if it all depends on you as you know what you'd like to do. Um, that your loan options. Well, you can
Determine.
still go FHA, but they're much more limited if you're having a house built, right?
Yeah.
So a lot of those a lot of those another thing a lot of another advantage, those builders, they have their own like access to financing, so they're working with brokers and they're working with whole banks that are offering them loan packages you probably wouldn't be able to get anywhere else. They have their
Mm.
own in-house financing and all that other good stuff, so you know they can do what they need to do, manipulate just to get the home sold. I don't think you'll be able to do that with a singular home on a singular lot and you just hire the builder to do it. That being said, there are builders, there are what they call construction loans that you can get, right? You can get a construction loan and you can have them build, you know, basically the loan isn't you know, before I tie myself up in a circle here,
Mhm.
um, I've done a construction loan one time, and how they work it out is the amount of they release bits of the funds to the developer or the builder that you're working with, and they do it in phases. So a third of the loan goes to them to get the house to a certain point, then another, and the second to get to another point, and the third to get to the next point until the home is completed, and then you move forward and move into the house and you start paying the mortgage. So again, it could work out, but it's just a little different
It's
if
a
you're building your
different
own.
and a little bit more,
Yeah, it's different.
little different rules.
Yeah,
Different
definitely
rules.
different rules. Definitely different
Yeah.
rules. Yeah. Okay.
But if you have the money and the wherewithal, you may be able to do that.
Oh yeah. Oh yeah.
Yeah.
Yeah. It can work out again. Like I said, if you got some cash and you have access to a construction loan person,
Mhm.
many mortgage brokers are out there that can offer you those kind of programs, but not all of them. So you'd have
Oh,
to do some digging. But yes, primarily you would pay less for a home that you would build on a single lot hiring a contractor.
got you. All right. So talk to me. Any more myths?
Last one. Last
Last
one.
one. Okay.
Are these hedge funds buying in largely low income neighborhoods, like mostly black owned neighborhoods, Latino owned neighborhoods, minority owned neighborhoods? Are they buying more so in those neighborhoods than anywhere else?
Are they targeting us, Brandon? Are they targeting us?
The answer is, I wouldn't say that they're targeting us, but yes. I think the numbers are something like over 30% of their purchases are done in lower income, or Latino, largely black owned neighborhoods.
Is it? Are they
Why?
the ones that say cash for your homes, cash for your?
Yeah,
Back in the days, they used to come through the neighborhood, cash for your home, and people used to
that's
take
it.
it.
That's it. That's
That
it.
is?
And these companies are slick, man. They don't come at you like Invitation Homes doesn't say we're Invitation Homes. We'd like to buy your house. You know they don't- they actually come at you through smaller companies that they own. They'll
Mm,
have a
wow, they have
smaller LLC that seems mom
wow,
and pop, right? And they're feeding that LLC cash. The LLC
wow,
buys your home, but it's actually owned by one of these larger corporations,
got you,
right? So they
got
got
you.
slick with it. So yes, that they do target our neighborhoods, but mostly because that's where, and I'm gonna end on this. I'm gonna end on this. I need everybody that's listening, those who have a ear, let them hear, right?
Let 'em hear.
We have in our neighborhoods the highest upside than you'll find in most other neighborhoods. Why is that? Because
Highest upside. Can you
highest up,
wait? Hold on. Define upside, please.
when I say upside, I mean when you're buying properties on the lower end that are at $200,000 or lower, you have more growth potential than a
Yeah.
home that's you're buying at like a million. I mean, it'll go up, but the percentage of growth between a black owned neighborhood at 200 and lower and a million and over, I mean, you can more than double your money within a 5-year period, because those areas in most cases are slated to be changed anyway by way of gentrification.
Gentrification.
Right. So they're doing their numbers. They're tracking the trends. They know that, like, take St. Petersburg for instance. Again, another place where it's targeted by a lot of these larger hedge funds. They're buying in those areas because they know that the area is going to be changing soon. They're putting a new
They're
they're
doing their
renovating.
research.
They're doing their research. There is the Rays Stadium, the Tampa Rays, the baseball team stadium. That entire area is going to be completely renovated soon, and it's backed mostly by city dollars, but also by, the owner of the Tampa Rays. But they're remodeling the whole area, and they know this, so they're buying homes all around South Central or South St. Petersburg, and they want to get in before the construction actually starts. And this is what they do.
Listen,
It's
they're seeing they're looking way ahead, and we always tend to. And when I say we, I'm talking about people of color. We give up our prime property. We say we feel it's not prime, and we give it up, and
mhm,
then we go to someplace else, and then when we leave, that's when our upside. Let's do the math. M for mathematics, making money, right?
mhm,
M for
mhm.
mathematics. We percent difference. Percent difference. Always remember this formula: final minus initial divided by initial times 100%. So the example that Brandon gave, you go from a million to 1.2 million. Like you increase $200,000. What's that percentage gain? Well, final, that's 1.2 million, minus initial, that's 1 million, divided by initial, that's 1 million, 1 million again. You know what that is? That is 20% gain. That's a 20% gain. When $1 million home goes up $200,000, that's a 20% gain. But what happens when your $200,000 home goes up $200? And that's what happens. That's what he's talking about, increased upside. So final, that's 400,000, right? Final 400,000 minus initial, that's 200,000, right? I increase my property value $200,000,
Mhm,
divided by initial, that's original 200,000, times 100%. You know what gain it is? 100% gain.
100%. Mhm,
100% gain. You go from in rich neighborhoods to from 20% gain for the same dollar amount increase.
mhm,
That's what he's saying. And we
mhm,
give up our stuff too soon.
mhm,
So the
mhm,
answer is yes. Partially yes.
mhm,
They are going and targeting, and that's because they offer cash,
mhm,
and the people here, we don't see the vision to where our neighbor is, or we don't have the information. We may not have the
mm,
information that they have. So what does that tell you? That means that we got to have people in our communities that are looking for information.
mhm. That's why we here.
That's
That's
why
why
we're
I
here.
do that's why we do market watchers, man. Look, you got to know what's going on in your neighborhood. You got to
What's
know, because these folks will get on the phone. They'll canvass your neighborhood. You give them a call about your home. They'll give you. They got a rap sheet. They got a rap, y'all. They got a script. Man, these guys got some good game. They'll get
Yeah.
on and say, well, there's been a dip in your neighborhood recently, but we can give you X amount of dollars, but we can close in 2 weeks, right? You don't have to pay no closing costs. We'll pay all your closing costs, right? And we'll
They
we'll
got a
get
game. They got a
yep,
rap.
they got a wrap. They got a wrap.
Watch those people with raps.
Mm-hmm. Mm-hmm.
Smooth talking.
Mm-hmm.
Smooth talking. Tell
Snake
you.
oil salesman. Snake oil salesman.
Salesman.
Do not give
Yeah.
up your home. Do not give up your home. Get the facts. Talk to a realtor in your
Okay.
area. Find out how much your home is worth. We did that for my mother-in-law. She lives in St. Petersburg. We get calls all the time. She actually put my number on her on whatever registry that she's on. So now I get all
Mhm.
those calls. So I love getting those calls. I'll get them investors. They say, "Well, we'll come in. We'll give you $200,000 for the home." Like, for
Yeah.
what? Well, a quarter of the ownership, you know it's gonna go up. You know they got this thing going on. Well, that it,
Uh-huh.
it might may or may not. They're still waiting on dollars and all that. Okay, I
Mhm.
hear you, man. I hear you. Well, call me back when you're ready to give me a real offer,
A
and
real
that's the
offer.
conversation.
A
Hmm.
real offer. And so don't make any moves unless you talk to somebody. Talk to Tower Team Realty Orlando before it closes. Make sure you reach out to him.
I'm
Don't
here
just
for you.
a lot of us we don't want to talk to people. We don't want to get advice from people. We so prideful,
Mm.
you know? So prideful. Talk to somebody who knows more than you, who has more experience than you. Before it has been in the game almost 20 years, if
20
not
plus. I'm over 20 plus.
20
My
plus
my
years.
my
Over
car
20.
my career is older than most kids. It's a have mercy.
Right?
Getting old, by getting old, man.
Oh man, you sound old. You see this gray hair? Shoot.
Uh-huh. That's some wisdom streaks. I
There's
see you.
some wisdom.
Yeah.
Talk to people who know before you make any moves. Okay. So, any last thoughts? So, talk to me about you've been intermingling facts with myths. But is there
Mhm.
anything you want to tell me in terms of facts about what these hedge funds, investor institutions are doing?
Well, I can tell you where they're investing for the
Okay.
most part,
Okay.
right? So there you'll find the places where they're buying for Florida. I'm not gonna state for other
You're
places, but
sticking from here, right here. This
yeah,
is
yeah, 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 yeah.
Florida,
Because
baby.
this is where we at. This is where
This is
we
where we
live,
at.
right?
Yeah.
Tampa is obviously one of those places. Riverview, Brandon, Florida, St.
Where's that?
Petersburg.
Isn't that near Tampa?
That's near Tampa. Yeah,
Yeah. Yeah.
near Tampa.
Howard used to
St.
live in Brandon. Howard and Sabone used to live in Brandon.
Okay, shout outs to
Mhm.
Howard. All right, yeah, man. Lived in the city with my namesake. Love it. St. Petersburg is one of those places. Orlando is one of those places. Seminole County. Not so much recently. Um, I guess because the place area has recovered for the most part, and they were buying a lot more homes in 2021 and 2022 than they were before. And here's the interesting part: I actually sold a home to a hedge fund 3 years ago, and it was in Lake Mary. This home, and they actually gave me more than my asking price for this property, like way more. It was something like $15,000 to $20,000 more than what we were asking.
Okay.
And there was no appraisal. They just had one guy walk in there, look around, make sure nothing was falling apart, and we closed in 3 weeks. And I thought, wow, it's totally different in a place in Lake Mary than it is, say, in South St. Petersburg, where I get these calls where it's like, we can't give you that amount, but we can offer you this amount.
This. Mhm.
Yeah, totally different.
Okay.
Totally different. But anyway, those are the three. Those are the main areas in Central Florida. Obviously, there's other areas, but these are the places that are impacting us specifically. And the last thing I'll mention here is that on average, at least for Orlando, I think I mentioned that already, they own about 22% of single family homes in the Orlando area. So if they're still buying, guys, what does that tell you about what others, as far as buying is concerned? What does that tell you about whether or not you should be buying? These guys are still going out there and they're still buying in
They're
this
still
market.
investing.
They're
They're still
still
investing.
investing. Yeah,
Yeah. They're still when I say investing, they're still putting money towards buying homes. And
yeah,
so obviously they feel that there's more upside to go. They wouldn't
exactly,
if got you. Got
exactly.
you.
These people, these like we talked about, they're not slow. They've done their numbers and they only buying in certain areas. So if they're buying, why not you?
If they're buying, why not you? If they're buying, why not you? Get that money. Get that money together and make the purchase.
Yes, ma'am. Yes, ma'am. Hometown Heroes. You want to hear more about it? Give me a call. The number is 305-305-0105. I know it sounds made up, but that's my cell number. You can text me on that number as well. I'm here for you. Here to serve. Yes, ma'am. Yes, ma'am.
Oh,
Thank you,
sorry.
Ma.
Brandon before closes at gmail.com 305 Make that move. I am the phenomenal STEMist. So is he. He's not really in STEM, but he's in real estate,
On
and
the M part, I'm on the
he
making
see
money part. I'm on the
he's in the
making money
math
part.
he's in the math making money. He's all about math making money, and I'm telling you something. The percent difference, the growth that
Mm,
we see in investment is
mm,
seen in real estate. So get in the game, guys. Thank you so much for watching. Thank you, Ma. Thank you, Sandra. Thank you, everybody
mhm.
else that took the time to watch. You guys have a good night. Wait with the camera.